It is my pleasure to welcome you to the Housing and Community Development Department Outreach Team first session of the 360 Road to Home Ownership series. My name is Latasha Smith, and I am the Community Involvement Coordinator for Constituent Service Outreach Team. Our department, as in all the divisions, works together to help to better equip community members to navigate the complicated home buying process. We will begin the 360 series off with the first session that will focus on understanding credit, how your credit history can be a key factor in qualifying for home ownership, and how to build a credit score that secure a mortgage that you would need for your family. We have a great presenter this evening and a lot of information to share. So there is a lot of ground to cover. What we will do, we will go ahead and get started. But before we get started, I just have a few housekeeping notes that I would like to mention. First of all, I would like all audio to remain muted throughout the presentation. Secondly, we are requesting that you put any questions in the chat box function. During the question and answer portion, we will assure that our speaker will tend to those questions at that time. And lastly, this is a recorded event. The recording and the presentation will be available to all attendees after the event. And so we will go ahead and get started. I will first read the agenda for today. Let's go ahead to the agenda. Today, what we will start with, I will introduce our interim director and our outreach team. Also, we have a mini commercial for our fair housing hotline to give you more information about that. Also, I will introduce our guest presenter. Our guest presenter is coming from Credit Coalition. Her name is Ms. Sherry Young. And then we don't want you to miss those upcoming events that we are having. And also stay tuned in upcoming events, all the dates for the remaining sessions for the series. And then I will come back with the final remarks. The next thing that I will do is introduce our interim director. His name is Mr. Keith Bynum. Sentiments as the same as I said at the beginning of this event. We thank you so much for taking out the time to come and learn about our program, as well as learn about the knowledge that we're giving you about credit. Also, just to introduce our outreach team. Our outreach team consists of Ms. Onika Porter, which is our administrative manager. Myself, Latasha Smith, I am once again the community involvement coordinator, and we have three excellent community liaisons. We have Mr. Pedro Salsa, Becky Benitez, and Dejanay Jones. Okay, so now we are up to the main event, and that is our presenter. Like I stated earlier, this is Miss Sherry Young. She is with Credit Coalition. Credit Coalition is a HUD-approved housing counseling agency. She is the executive director, and she is also HUD certified. She is a HUD certified counselor. Miss Young, I will give it over to her, but I want to say this one thing. One question that we have all the time is, how does credit fit with our program? Just to give you a little nugget, Credit, our program for the home buyers assistance does not require a certain number for our credit to have for your credit score. However, and I know Miss Young will definitely go into more detail about this. Even though there is not a requirement for our program, credit is a essential component to getting the best mortgage for yourself and your family. So that is why we are beginning this series with the information on Credit 101, learning the steps to make that decision and how to better get a better interest rate for yourself if you're looking to be a first-time home buyer. So now I present to you Miss Sherry Young.
Hi, thank you, Latasha. Thank you so much for having me. I'm Sherry with the Credit Coalition. As Ms. Smith said, I look forward to speaking to all of you this evening and to share information, as much information as I can. Again, as the Executive Director of the Credit Coalition, in all of our classes, we do not tell anybody what to do. We provide information, we empower our community, and then it's up to you to move or act on the information that you learn. So tonight what we're doing is a little piece, a little snapshot of what we offer in our Fundamentals of Good Credit class. And tonight we will be discussing our path to homeownership. So everybody, if you are here tonight, you might already, well, if you are here, you might be already a homeowner. You might be interested in homeownership, or you just may be taking this time because you just want to understand more about the credit process. We're here to answer whatever questions you have, no matter where you are in your stage of life. So with that said, I would just like to bring to your attention our topic tonight, our path to homeownership. So we're going to cover a few steps. I have this broken down into 4 steps. Step number 1, here we go. Step number, if I can get back to my slides. All righty. So we're first going to get your credit together, get yourself together, your finances together. And I guess I'll just start with this. My question to you tonight, and I don't know if you want to enter in the chat, if Latasha, if you could check the chat as we go. I believe you have asked to keep your questions till the end, and then we'll have a Q&A session once I go through these slides. But my question is have you seen your credit and specialty reports? It is so important to know what is reported on us. She mentioned earlier the credit score. Now, although the down payment assistance program here at the city does not have a score requirement, credit score requirement, the loan product that you choose might. And it is important for us to understand what goes into a credit score and how that score is obtained. Well, it all has to do with what's on your report. If you have not seen your credit report in the past 12 months, you should order those reports. We are all entitled to see our free personal and our credit reports as well as our specialty reports once every 12 months. The FACT Act, the Fair and Accurate Credit Transaction Act, was passed back in 2003, and that gives us all the ability to order those reports free. Again, free once every 12 months. This does not give us a free credit score. This gives us the report that the score is based on. If you were wondering, well, how in the world do I get this free report? Some of you may be saying, well, I already get a report with Credit Karma, or I get a report with NetSpend, or I get my report, I can see something if I have a credit card and they let me see my credit report at least once a month. Well, that may not be your full report. Your full report comes from the 3 credit bureaus, Experian, TransUnion, and Equifax. And through the FACT Act, we are entitled to see that report each of those reports through annualcreditreport.com. This is the true free credit report that we are all entitled to see. Now, when COVID came to visit back in I guess, March of 2020, the 3 credit bureaus extended that. Instead of just once a year through the FACT Act, we are now able to see each report, TransUnion, Experian, and Equifax, each report weekly, free, through their website, annualcreditreport.com. Now, if you want a written report, a printed report, we're still only entitled to those once every 12 months through the FACT Act. But if you want it online, you can just go to annualcreditreport.com, select my report, and answer the questions, and you'll be able to download each of the 3. Now, these do not affect our credit score. These are soft inquiries. Again, they do not affect a credit score, but you're not going to see a credit score with these reports because the FACT Act only provides us the reports themselves. So just know that per the ruling last March, they extended last March 16th of last year of 2021, they extended it another year through April of this year. I checked the website today. It is still not saying anything about moving beyond April of 2022. So I would hope that if you are interested in getting these reports, at least monitoring for the next month, every week, go ahead and go to annualcreditreport.com, follow the prompts, and download each of the 3 bureau reports. It's important to see each of them because they may have different information. Now, with that said, with our credit report, it contains information, again, that's reported by our creditors, the companies that we have credit relationships with. Back in, I want to say 2017, 2018, the credit bureaus no longer were able to report our public records, liens, and judgments. Now, if you have a bankruptcy, it will still be listed in the public records section of the credit report, of your personal credit report. But if someone has sued you, taken you to court, and won a judgment or lien against you, that will not be listed on your credit report. And so a lot of folks, they remember back in the past that public records were on our credit report, but now they're not. And the only way we as consumers can check the court records all across the country without going to those different courthouses and requesting those documents, if there's something in our name, you can see what's listed in your name by going to the LexisNexis Full File Report. This PDF, this slideshow will be shared with everyone. So again, if you have never heard of the LexisNexis Full File, it's a great way. It's free. It doesn't affect your credit score, and it supplies us with many different reports under a big umbrella. You're going to see any liens and judgments that have been recorded in your name. You're going to see your insurance records. You're going to see your rental records, your deed records. You may see driving records. There is lots of information that all this data is pulled together under one report, the LexisNexis Full File. You can order that report online. You can print out a form, mail it in. But whether you order it online or you print out a form and mail it in, you'll receive a letter in the mail in about 10 to 14 days after they receive your request. That letter is going to instruct you to go online with a particular website and a specific PIN code for your report. You'll have 30 days to download that report. Now, if you're saying, oh my goodness, I can't download it, I only have my phone, that's okay. The letter that you receive will also provide a phone number for you to call if you're having a difficult time downloading it or if you need a paper version. So these reports are not thin. They have lots of pages, and because it has a lot of data. If they cannot find your information, or if you don't provide enough data for them to verify it's you, you'll get the letter you'll get returned to you will say, they need additional information. They could not find information based on what you provided. Please provide additional information and they'll tell you what they need. Okay, so order the annual creditreport.com report and the LexisNexis full file. LexisNexis full file is once every 12 months free, but the annual creditreport.com, because of COVID, we are still entitled to see those every week through April 20th of 22, so next month. All right, so when you get this credit report, if you're thinking, well, you know, I don't want to use annualcreditreport.com, or maybe you already did get the annualcreditreport.com report, but then you receive a letter in the mail, you apply for credit or employment or insurance, and you receive a letter back that you were denied. If you were denied that credit, employment, or insurance, you're entitled to another free report directly from the credit bureau. If you are a victim of fraud, you're also entitled to another free credit report directly from the credit bureaus. If you receive public assistance, you're entitled to another free credit report from each of the 3 credit bureaus. And if you're unemployed and you certify in writing that you plan to search for employment in the next 60 days, they will send you again another free personal credit report from Experian. You send a letter to TransUnion, you send a letter to Equifax, you're entitled to another free report. So there's plenty of ways to get your credit reports for free. Now, the reason why I say that it is so important to see these bureau reports, the Experian, the TransUnion, and Equifax report, is because these reports, as I said earlier, are the full report. They have something on them that Credit Karma doesn't. I don't know how many of you are using Credit Karma to see your personal report, but the Credit Karma report is only giving you 2 of the 3 bureaus. It's giving you data from TransUnion and giving you data from Equifax, not Experian. But something that's missing on all reports, unless they come directly from the 3 credit bureaus, you get those through annualcreditreport.com too, those reports from the bureaus actually have 2 sections of inquiries. They have a hard inquiry section, which will show any inquiry that you have given permission, any company that you give them permission for to check your credit. It's going to be for the past 2 years. Now, your credit score only takes into account the past 12 months, but the credit report itself in the hard inquiry section, it'll show all inquiries, companies you've given permission to check your credit, hard inquiries over the past 2 years. When you get these personal credit reports, again, remember, these are soft inquiries. You will not see soft inquiries on your Credit Karma or other consumer reports that don't come directly from the 3 bureaus. It is so important to see this full report, to see the soft inquiry sections, because the soft inquiries contain not only companies that are offering you credit. You might get those promotional letters in the mail. How many of you have seen or you get junk mail that offer you the wonderful opportunity to order order that piece of credit or apply for that piece of credit? If you get those letters in the mail, that letter comes with a box. It may come with a box at the bottom that says that if you don't want to receive pre-screen offers of credit like this and from other companies, from this and other companies, you can opt out by calling a toll-free number, the 888-5-OPT-OUT, or go to optoutprescreen.com. If that box is at the bottom of your letter that you received when they're soliciting you to apply for credit, so basically you get a letter that says, "Hi, Sherry Young, you have been pre-approved to apply for this credit card." They're not telling me I'm approved for the card. They're telling me I'm pre-approved to apply. If at the bottom of that letter it says this box that gives me the right to opt out, that's an indication that your name and address or my name and address was sold to that company by one of the 3 credit bureaus. It doesn't say which one, but by having that pre-screen box at the bottom, that opt-out pre-screen box, that is saying, in essence, that Experian or TransUnion or Equifax has sold my name and address. They haven't sold my credit, just my name and address to that particular company or on a mailing list. When I get my personal report back and I look at the soft inquiry section, whatever company that sent me that letter, if they bought my name from Experian, that company's name is going to be in the soft inquiry section. And the day that they purchased or that they were provided, I guess they purchased the mailing list that had my name on it. If they bought it through TransUnion, if they bought it through Equifax, the same thing. It's going to have that credit name in the soft inquiry section. So those are promotional inquiries. They do not affect our credit score. Also in the soft inquiry section are the account reviews. If I have an account with X Bank can go in anytime and check my credit. If they're going to go in and check my credit history to see how I'm paying my bills, they may be looking to see how's my debt load, do I pay on time, or am I now in a stage of my credit life that they're willing to offer me additional credit. Maybe they were willing to raise my credit limit. They may be going into that credit report because I am their customer. They're entitled to go in and look. It does not hurt me. It's a soft inquiry, and that's considered an account review. It's in the soft inquiry section. Another creditor that shows up in the soft inquiry section are insurance inquiries for insurance underwriting purposes. This is where folks find out, or maybe find out, that they have been a victim of identity theft. Someone else has used their name on an insurance application. It'll clearly say in the soft inquiry section, it'll say Allstate for insurance underwriting purposes. If I don't have Allstate insurance, let's say I have triple B insurance, it's not Allstate, and I have never applied for Allstate insurance, but yet I see on my personal credit report in the soft inquiry section, Allstate for insurance underwriting, that could mean that somebody is using my name to apply for insurance. If it's not me, I dispute it with the Bureau. I can dispute it with the Credit Bureau. Okay, there's one more soft inquiry that a lot of folks are surprised on, and that's employment inquiries. If you're applying for a job and you give permission to your future, or on the application, you give permission to do background checks, a credit report might be one of the background checks that particular employer does. And if they are going to pull a credit report, it is a soft inquiry. It'll provide that information in the soft inquiry section. When you read your report, it'll say whoever that employer is. The good news here is employers see a partial version. They don't see your account numbers. They're going to see basically, do you pay your bills on time or not? And a lot of folks in our classes tell us that's not fair. Why would they need to see that? Well, if we were live, I'd ask you to tell me, why do you think they need to see that report, or why they choose to order a personal credit report on us? And that's the reason is because they're using our credit report as a character reference. They're determining if we meet their profile of a future employee by the way we take care of our past. And I think there's been I just saw something pop up on the screen, but I don't know where it went. But what we'll do is, Ms. Latasha, you said you want me to wait and answer questions during the Q&A from the chat. Is that correct, Ms. Latasha? Well, if I don't hear from her.
Sherry, that's the way that we do it all the time.
That is the way?
Yes.
Okay, well then I'm going to follow the rules. So don't worry, we will answer all the questions that you put in the chat. If you start entering them in, we will answer them at the end of this presentation. So
Correct.
back to soft inquiries. It is so important to get that personal report. We're able to see through annualcreditreport.com every week, at least through April 20th, and possibly longer if they do another extension. And remember, it does not, when we pull our personal reports, it is a soft inquiry. It does not affect our credit score. And so, as I was saying, your credit report is just think of this as a financial report card, and it documents your past payment history. The creditors might use this credit report as a tool to assess your ability to repay a debt in a timely manner. And so it doesn't, just because I paid my bills in the past on time doesn't mean I'll pay them in the future on time. But if I have a history of paying my bills on time, that's a good indication that I will pay bills on time in the future. Now, just because I paid bills not on time in the past does not guarantee that I won't be an on-time payment in the future. So if you are planning on applying for any kind of credit, and again, in this case, we're talking about home ownership, but before you apply for any credit, get a copy of those reports, get a copy of all three, see what's on them, and be able to explain to the creditor who you're applying to what they're going to see before they see it. They may ask you to put an explanation in writing if there's anything in the past that needs to be addressed. But again, our credit report is just a report card of our past. We already talked about that employers may view the credit report as part of the background and check process. And just don't forget, those insurance companies also can review a credit report when you apply for car or homeowners insurance or renters insurance. Now, when we get our personal reports back, you may find information that's incorrect. And so they tell us that 1 in 5, the Federal Trade Commission did a study quite a few years back of credit reports, and they determined that 1 out of 5 people have an error on their credit report. 1 out of 5. Now, error could be an address that's not yours. It could be a credit item that you paid in full but still showing a small balance. It could be a wrong item, something that's not yours, somebody with a similar name, but their credit information is on your report. So again, errors could be lots of ways of errors. The key here is there's something on that report that's not correct. And if you don't, or if you find incorrect information on your credit report, you don't need to pay anybody to clean that credit report for you. The credit report that you receive is going to, whether it's online or in paper print, it is going to tell you exactly how to file a dispute. It is simple to do. You just, if you're online, as you download a report, you just press the button, dispute this item. Again, it is so important. If you don't agree, dispute. If you receive your credit reports through the FACT Act, through annualcreditreport.com, your creditors have about 45 days to complete the investigation to return an answer to you. And when they do the investigation, they are either going to delete the item because it's not yours, they're going to update the item and correct it, or they're going to write you back and say, after their investigation, this item stands. And if you know for sure it is not you, you say, nope, it's not me. It's definitely not me. Now you take that complaint or that dispute process to the creditor. Your credit report's going to tell you who the creditor is and how to contact them. But we suggest start first with the credit bureaus. If you receive your credit report because you were denied credit, employment, or insurance over the last 60 days, you were a victim of fraud, you received public assistance, or you're unemployed and you're looking for work the next 60 days, and you certified that in writing, then the bureaus have about 30 days to run their dispute process. But in today's society, with everything done electronically, usually those processes are very quick. And you will get a response back from the credit bureau with the answer. Again, if you don't believe an item is correct, dispute it and start the investigation. Only inaccurate information can be removed. Some of these companies tell you that they can get everything off your report. If it's really yours, it's going to be on there. Let me just say this. If you fall for one of those companies that tell you they can clean your report, everything off of it, the credit reporting agencies, if they feel that a dispute is frivolous, say somebody's disputing 6 things on your credit, you're disputing, or a company's disputing 6 things at once, and you're not filing a fraud alert. So it's not because you're a victim of fraud. It's just that you're disputing everything on your report. What's the chance for that person to have everything wrong if they aren't a victim of identity theft? And so the credit bureaus do not have to act on what they believe are frivolous disputes. So if you are thinking that you can dispute a negative item away, if it's truly yours, understand it won't go away with the dispute, but it will eventually fall off due to time, because negative information will only stay on your accurate information will only stay on your report as long as the governing laws allow. And so most negative information will fall off within 7 years of the last time you were late. If it's an account that you still have open, then 7 years from the last time you were late, it no longer shows as negative. The negative is gone, and now that account will show in positive status. So again, folks think, oh my goodness, my credit report will never get right. If you pay your bills on time going forward, eventually a negative item will fall off due to time. So again, just know that our payment history, if we had a late payment, it doesn't haunt us forever. Now, for some of you out there, you may think 7 years is a long time, but someone my age, 7 years, a blink of an eye. So I can look back 7 years ago and think, dang, where'd the time go? But when I'm applying for credit, I want it to go fast. Yeah, I don't want anything negative on there. But, again, we're human. Some of us do have late payments. If you do have a late payment, just be prepared to explain it. It could be that you had late payments due to a natural disaster. We've had lots of natural disasters in and around our area. And so, if you were a victim of Hurricane Harvey, if you were late because of maybe you were flooded, or maybe your employer was, or maybe you lost work because of the federally declared disaster, your credit report may already have a statement on there that the credit bureau has placed, because our region, we were affected by many federally declared disasters. So just don't be afraid of the credit report. If there is misinformation, dispute it, clean it yourself for free. Clean it yourself. So let's talk a little bit about credit scores. A lot of people are concerned about the number. They want to know the number. So just understand that a credit score is derived by a statistical program. You cannot sit down with a paper and pen and figure it out. Okay, if I do this, my score is going to go here or there. There are programs, there are companies, and even the credit bureaus have credit score evaluators where they tell you, based on your history, and if you do X, you might see an increase of Y. Or if you do Z, you might see a decrease of Z. So again, no one can tell us what we can do to get to a particular number, but there are some tips I'm going to share with you in a little bit on what the FICO scoring model says to us to share to help us understand how we can possibly raise a current credit score. Okay, so just remember that credit scores might be important because it might be used to help determine the terms that we're offered or the rate that we're going to pay. So terms, length of time, the rate is the interest rate. So again, are we going to be offered a short period with a big payment with a lot of interest, or are they willing to give us a conforming, a loan product that has a good rate and a good term. So they use the credit score. If a company is using a credit score, not all companies use credit score to determine risk or to determine your rate or determine your term. But if they do, just think of this. The score helps predict how likely you'll repay a loan and make a payment when it's due. That's what they're using the score. It's not the only indication, but it's one of them. And so there are many different types of credit scores. Y'all probably hear the commercials where a lot of companies will offer a free credit score. Yep, a lot of them do. My question to you is, if you're seeing a credit score, do you know which one it is? Do you know which version? Do you know which type? So different creditors may use different scoring models when evaluating creditworthiness. I might see a personal report. I'm going to go back to Credit Karma. I might have a Credit Karma. I go in and I look at Credit Karma and it gives me 2 scores. Wonderful. I see my score. Yay, I see my beautiful score. Well, that may not be the score your lender sees. That's a Vantage model. We'll talk a little bit of a difference between the different models in a bit, but that's a Vantage model and possibly not the model that your lender's using. Most lenders still today are using the FICO scoring model, the Fair Isaac model. And they're definitely different. They're based on the same range. So the current version of FICO and the current version of Vantage range from the 300 to the 850, maybe up to 900 range. So they're on the same range scale, but how they make that number is totally different. They look at things differently. Our FICO scoring model, I'm going to say this and add this again here. Just know there's many different FICO versions. Even though the score may range from 300 to 850, there are many different versions the lenders have access to. There's auto versions, there's retail versions, there's mortgage versions, there are personal versions, the ones we see. And out of all of those versions, each of the 3 credit bureaus have their own versions of the FICO model. So when you see a score, just know that score that you're ordering or that score that you see is based on whatever model, whatever mathematical model that it was developed from at that moment in time that the score was pulled, based on what it was ever on the credit report that it was developed from. So if I'm pulling a score, personal score, and it'll say, Sherry Young, this is your personal FICO, say FICO 08, or my personal FICO 10, or my personal FICO 9. It'll tell me which personal score that is. That may not have any relevance to what the lender's pulling. They may be pulling a FICO, but they're pulling the FICO version that they are using, not the one that I'm seeing. So with that said, just know that the FICO scoring model has a 5 different buckets of information that it forms its score on. The first one is our payment history. 35% of our FICO score is based on how we pay our bills. It's our bill payment history. That's the biggest part of the FICO scoring model. The second piece of our FICO score is determined by our credit utilization. Now, credit utilization is, again, so important. Our credit utilization, what it does, it takes all of our credit cards for the retail, all of our revolving accounts. It adds up our limits, so we know how much limits available to us. And then it adds up our balances. How much do we owe at this particular day and time based on what's listed on the credit report? They determine the utilization by taking our balance divided by our limits. And that's the utilization for at that particular moment in time. Basically, again, what's listed on the credit report. So it's so important for us to understand what is listed, what's on our credit report, what are our balances, and what are our limits. The next piece of the credit score for FICO is based on our length of credit history. The longer you have open lines of credit, the better this section is, the longer history we have. So I'm going to suggest that if you're considering moving forward with an application in any time between now, next year, 2 years, 3 years, however long it is, do not close any credit. Do not open any new credit until you talk to the lender of your choice. Talk to the lender of your choice and find out, what do they want to see on your credit report? What do they need to see based on their current credit underwriting guidelines? They're not going to tell you, if you do X, you'll get a loan with us, or if you do this, you won't get a loan with us. But they'll tell you based on what they see. As you talk to these lenders, you talk to these loan officers who are willing to talk to you, make an appointment with them, and just let them know, I'm maybe not ready to buy today, but I'm thinking about buying at the end of the year, or I'm buying in 6 months, or I'm trying to put a contract out now. I need to get pre-approved. What are you looking for? What do you need to see? So again, your length of credit history is 15% of that score. New credit. If I have opened new credit, I have inquiries. Even if I haven't opened it, if I have inquired in the past 12 to 24 months, that's going to be on my credit report. Remember, credit inquiries only affect us for 12 months. So even though the words stay on our credit report for 2 years, it only affects our credit score for 12 months. So if you have an inquiry, it is affecting you 12 months from that pull date. And then the types of our credit that we're using. And what they mean by this, if you have revolving accounts, credit cards. If you have those credit cards, do you have store cards? Do you have national bank cards? What do you have, installment loans? What type of credit do you have? Do you have a credit mix? That's what the FICO scoring model likes to see. Now, it's only 10% of our score, but you can see that a lot of things come together in the pot to make our credit score. And there's no particular rhyme or reason on any of our reports why we do this or why we do that or why we have this or why we have that. The thing is, the credit scoring model will take into account your full report. All right, let's talk a little bit about the Vantage Model. The Vantage Model is actually owned by TransUnion, Experian, and Equifax. Remember I said FICO is Fair Isaac. That's a company that owns the FICO model. So Vantage, the 3 credit bureaus decided that they wanted their own credit scoring model. Why, people buy their reports, but then the bureaus have to actually pay FICO for those scores. And so they thought, well, hey, we can make the money both ends. We can sell the credit score, our own, as well as the reports. And so they developed a scoring model, again, the Vantage Model. We are now, I believe, on the 4th version of the Vantage Model. When the Vantage first came out, it graded us on a scale of 500 to 990, and we also had a letter grade A, B, C, D, or F. Well, now that we've rolled forward for a couple of years, now they are also on the same score range, that 300 to 850, but the numbers do not equivalent the same. So the way they calculate, how FICO gives us that 35% for our payment history, 30% for our utilization, 15% on our length of credit history, 10% on new credit, and then another 10% on our types of credit. Vantage doesn't give us that. They don't tell us exactly. They just say that they do. It takes all of our history into regard in some form or another, and it's very important to pay your bills on time. So I'm going to ask that you do a homework assignment. Now, I probably won't see you again unless you join our Credit Coalition class in the future, or maybe you're already in it now, or maybe you've had it in the past. But I'm going to ask everyone to follow through my step 2, and that is to know who and what you owe. So in our classes, we ask everybody to prepare a debt worksheet, to be aware of what you agreed to and, okay, the terms you agreed to and who and what you owe. So we suggest well, it's a homework assignment in our class, so it's not a suggestion, but for you guys, I'm going to ask you to make a list of everybody who you owe. It's for your eyes only. Make a list, and you're going to, on that list, you're going to put on that list the interest rate, the APR, the annual percentage rate that you're paying on that particular account, the name and address of the creditor, and the date the account was opened. Remember, we talked about 15% of our credit score with FICO is our length of credit history. So you need to know, when did you open this account? You're going to put some kind of identifier on there, not the full account number. So maybe the last 4 digits, something to bring to your attention which Visa card this is, or your Macy's card if you had more than 2. I know I've talked to a lot of folks that have multiple cards of the same kind. So again, put something on there specific for that account. Then you're going to list your contact number, the contact number for that company. So you know who to contact if you're going to pick up the phone and call them. Your limit. What is your account limit for this particular account? If it is an installment loan like an auto loan, something you pay over a period of time, you have a payment starts here and you have payments for so many months or years. If it's an installment loan, then your limit is going to be what that contract started out as. So that means you need to pull that contract so you can fill this out. Again, for your eyes only. You're going to list your balance. How much is your balance this month? What is owed as of this billing cycle? You're going to then calculate your debt utilization for that particular account. Again, take your balance, divide it by your limit, and determine what is your utilization. I'm going to talk about the importance of utilization again in just a minute. And then I'd like for you to list your minimum payment so you know what minimum payment is required for this account. Now, maybe you're paying more than minimum, or maybe it's an account you're not paying on right now. But if you don't know what the minimum payment is, when you get your personal credit report back from annualcreditreport.com, it's going to tell you what the minimum is. And then your last column is the billing date. It is important to know our billing date. And in class, I ask everybody, what is the definition of a billing date? And I don't know if anybody can put in the chat, but the billing date is not the due date. The billing date is the day the billing cycle ends. It's important to know that date. All right, so we'll move on. Okay, so you're going to know your credit limits. We're going to ask you to understand your balances. And if you are trying to build a credit score, the quickest way to get a credit score to rise, the quickest way, I see your closing date. Thank you, Christian. The quickest way to get a credit score up is to bring your balance down. Now, many of you may have heard, and in fact, we taught for years in our class, that if you wanted to optimize your credit score, bring your balances on your credit cards down to no more than 30% of your credit limit. Well, according to FICO today, and they are now telling us that 30%, bring it down to no more than 30%, that's the maximum it should be. For an optimum credit score, for the best credit score, for the folks that have the highest score, they look at those folks that have the highest score, they have a very small utilization. They have a utilization of 10% or less. So that means they are just barely using their credit, barely using their credit cards. And when the bill comes in, what gets reported to the credit bureau is the balance from when the billing date, when that's sent in, that's how you get your statement, that's your last month's balance. That's what gets reported to the credit bureau. And if it is little bitty, like less than 10%, that's helping your credit score. If it's higher than 10% or higher than 30%, they're telling us that could impact your score. that could keep your score from rising. So the quickest way to get a credit score up, no matter what those companies tell you they can do for you, no, the quickest way you can get a credit score up is bring your balances down. Now, if you're using your credit cards for points, you're using your credit cards to get cash back, if you're using your credit cards for extended warranties on the item that you're purchasing because you're using that credit card, they give extended warranties or they give points again or cash back, then you may not really be caring about, it doesn't bother you to see what a score does, how it moves. But if you are using it for those reasons, you can still use it for those reasons. But if you know the billing date, so I'm gonna use a number here. I have a limit of $300, and I'm going to go out and I'm going to buy something because I get points back, or I want the extended warranty. My credit card company offers it if I use their card. So I'm going to pay $200. I'm going to have a $200 purchase. Well, that's going to put me way up there on the utilization, way high. And even though I'm charging it, I'm putting it on my credit card, my intention is not to impact my score. So if I know the billing date, I know my billing date is, I gotta look at the calendar here, my billing date's the 28th. And so here it is the 22nd. I buy this item on the 22nd. I get the perks. I'm going to be able to get the either extended warranty or the points or the cash back. But then instead of waiting for the bill to be generated on the 28th, I already have the money to pay it, so I'm going to pay down. I use the card today, and then 2 days later, I'm going to go ahead and pay down my balance. I'm going to pay down my balance. I'm going to send them, it was $100, so let's say I'm going to send them $170. By sending them $170, when my bill's generated on the 28th, I am only now going to owe $30. I'm going to be within that 10% cushion. So that's not going to impact me. So if you want to play with the numbers, that's one way to play with them if you have the ability to pay. We would never recommend you using your credit card if you don't have a plan to pay it. So again, I'm not trying to encourage you to use credit. If you are in the process of purchasing a home, you don't want to use your credit at all until a lender tells you what they want to see. So again, kind of putting carts out there and horses out there, but what I'm trying to share with you is there's ways that you can help yourself, help your credit score. If you know your utilization and if you know your billing date, you can work the numbers. Now, let's say I don't pay it before the 28th. So when my statement is out, I'm going to be reported. When that company reports my information to TransUnion or Experian or Equifax, maybe one, two, or all three. But when they report, it's going to show that high balance and my high utilization. My credit score is going to probably go down a couple of points. I don't know how many, but it's going to probably go down a couple of points. Next month, when I pay that bill in full, when that new balance gets reported, and it's less than 10% of my limit, let's say I pay it in full, and then I let it sit still for a month. When I pull my credit report, my score, if I get a scoring model, after that next billing cycle is reported, I should see an increase in the score. I say should, because if anything else is reported, an inquiry or any other balances change, or I miss a payment, well, all that's going to change my credit score too. So again, one thing won't make a difference if anything else is reporting in a way that doesn't help your score. All right. So again, know who you owe, know what you owe, pay your bills on time, make a plan to pay the credit card balance in full when the bill arrives. When you get your credit reports, they now show what's called trended data, a trended data report. And not all creditors report in trended data, but what this is your report's going to show the month it was due, the minimum payment that was required. It'll show what you actually paid. and then it'll say your balance. Now, some creditors don't report in trended data, but all those blanks are going to be there with little lines. If a creditor doesn't report, again, the trended data, it won't have that data. But most creditors, the larger creditors, are reporting. It'll report your current month payment requirement. What's the minimum? What did you actually pay? And then your remaining balance. All of that is on that credit report. It's really cool to see it. Okay, do not close any existing credit accounts. If you're thinking that credit card is burning a hole, calling your name, Sherry, use me, Sherry, use me. If it's calling my name and I don't know how to say no, you don't close the account. Instead, try taking that credit card, put it in a Ziploc freezer bag. See if I have one here. Put it in a Ziploc bag. I would say use a gallon bag, not this little bitty whippy bag, but use a gallon freezer bag. Drop that card in, fill it with water, stick it in your freezer, and freeze it. That's going to keep you from using that account. Now, some people tell me that they buy everything online and they have their credit cards auto-populated on Amazon.com or anything that they're paying for, anything they're buying things on. They already have their credit card on there. So all they have to do is select their form of payment and hit purchase. If you have that, it's going to be very easy to go ahead and just buy just because you want. We suggest, at the Credit Coalition, we suggest remove that. Remove those payment options. Remove those forms of payment from your accounts. And next time you buy, we're not saying don't buy, we're saying next time you buy, you're going to have to go get that credit card. You're going to have to sit down on your device, on your phone or on your computer, laptop, or whatever device you're using, and you're going to have to enter all that data. Now, while you're doing that, that's going to give you a cooling off period. Not as cold as that frozen Ziploc bag with that credit card in it, but if you were going to use the Ziploc bag frozen credit card, you're going to need to defrost that card before you can give your data. So we suggest defrost it like a Thanksgiving Day turkey. You got to put it in that bathtub and let it soak and let it slowly defrost, because you cannot put it in a microwave because you'll ruin the chip or you'll ruin the strip on the card. So back to ways to fool yourself or to save yourself, take that prepayment off of those automated lines, all those purchasing lines, or put that card in that Ziploc bag, freeze it, and that will give you some time before you make that major purchase or you make that purchase with that card. Now, some of you are probably rolling your eyes thinking, no way, that's not for me. We're not saying you should do this. We're saying think about these. You know yourself. You know if your credit cards call your name, and you know if you're the person that's going to pull that card out quick and use it. We're not saying don't buy things. We're saying just be an informed shopper and find a way to, there's a bumblebee just went by, find a way to protect yourself from possibly overusing. Okay, now step number 3. We ask all of our families in our classes to know what it takes to live your financial life. And it starts with tracking your spending for at least a full month. And you're probably wondering, what is that? Why? Well, sometimes if you're trying to figure out what you can afford, or you're trying to figure out where my money's going, the best way to do that is just write it down. Take a full month. Write down everything you spend. Make a list. Who are you buying? Who are you paying? What are you buying and how much and the date? Write it down, categorize it, and then save receipts. Now, a lot of folks don't like saving receipts in our classes. They tell me that, they monitor everything on their debit card, or they monitor everything from their credit cards, or they have an app for that. Yeah, that's great that you're monitoring your spending with an app. But there's something special about paper. At the end of the month, after you pull out your paper sack or your Ziploc bag full of receipts, you're going to know where you spent not only your money, but also your time, at least that time to do your shopping. So again, we're not saying don't shop. We're saying know what it takes to live your financial life. And then as you're doing this, how many of you pay yourself first? How many of you prepare for either emergencies or opportunities that may come your way in the future by paying yourself first? If you tithe, you do that first. And then a lot of folks tell me that, well, they save or they pay themselves first at the end of the pay period if there's anything left. The problem is we usually end up spending whatever is in our bank account or on our card before the end of the month. If you're cash only, if you're just using cash, it's easy to spend that cash. You spend until there's no cash. Well, we're suggesting you go ahead and you pay yourself first. Put it somewhere right when that paycheck hits or however you earn your earnings. Pull some out, put it aside. Pull it out, put it aside, pay yourself first. If you need the money during the pay period, you know where it's at. It's there waiting for you. But by you building a reserve, you are preparing yourself for future home ownership. Most lenders are going to want to see that when you go to closing, most mortgage lenders want to see that you still have money in the bank when you go to closing. They may say you need 1 to 2 months of mortgage payments in the bank. So again, this is a way to start preparing yourself not only for emergencies or opportunities that may come your way that need money, but also for your path for home ownership. If you have creditors that you owe, if you are in a situation where you're trying to figure out what to do with past debts that maybe haven't been paid, before you agree to something that you can't afford, talk to the creditor. Explain to them your situation and ask them for a workout. A workout that may be able to benefit both of you. One, give you a payment you can afford, and give them a payment to remedy the debt. You want to also ask them if you can afford payments. Again, if you can afford payments, you want to offer a payment that you can afford, not what they're asking for, one that you can afford. If you can't afford it, don't promise something you can't do, because that's not going to help. When you're ready to buy this home, moving along in the home ownership process and the lending process, your lenders may ask you to take care of some outstanding debt that's on the credit report if you have some. They may want credit A be taken care of but don't care about B or C. Or they may care about B and C and not care about A. That's why it's important to talk to the lender of your choice before you start the process. Let them look at your credit report and ask them, what do they need to see to be approved for a loan moving forward? Okay, step number 4, attend a homebuyer education class. Now, for the down payment assistance programs, whether, I know we're here with the City of Houston, but if you're using any of the down payment assistance programs, most of them will require you to attend a HUD-approved housing counseling agency class. Now, you can find a list of the local HUD-approved housing counseling agencies on the City of Houston website. They have a link to the Houston area down payment assistance programs. You can also go to HUD.gov in case you're not from the greater Houston area. You can go to HUD.gov and just search for a housing counselor. You can search when you go to that section. This is a link on the slide. But again, just HUD.gov, search for a housing counselor. You can put in your zip code and it'll bring up the counseling agencies, HUD-approved housing counseling agencies that are near your location, in your area. All right, I'm also giving you here on the website the Harvey Homebuyer Assistance Program, recovery.houston.tx.gov / I think was to say HHAP. You can go to the city's website and you can see all the programs they have for the home ownership, to becoming a homeowner, all the assistance programs. lots of good information there on the city's site. So to wrap up, before we start questions and answers, be an informed consumer. Please order your personal credit reports through annualcreditreport.com. They're free. They do not affect your credit score. You can order them online. Online, we're entitled to see them every week. Experian, TransUnion, Equifax, again, through annualcreditreport.com through at least April 20th of this year. It may go longer, but right now, that's right now the date that they're providing us. You want to pay your bills on time. Oh, back to that. If there's any incorrect information, dispute it. Dispute it. If it's incorrect, you're going to need to see all 3 credit bureau reports. They don't all have the same information. Not all creditors report to all 3 bureaus. In fact, there's no rule that says they have to report to any of the 3 bureaus. So again, annualcreditreport.com, order those 3 reports, dispute the information that is not correct. All right, and pay your bills on time going forward. Keep those bills on time and be patient. It takes time and discipline to build or improve our credit history and credit scores. If your credit history is wonderful, if you have no signs of late payment, if you have a lengthy credit history, just continue, pay your bills on time. If you have a thin credit file, maybe you don't have credit history or a lot of credit history, your lenders, when you're ready to buy a home, your lenders may be willing to use what's called alternative credit history. Your utility bill, history letters, your any, maybe if you pay child care, a credit history letter from them, things that do not report to the credit bureaus. So again, it's important. Know what's on the credit report. Be able to explain it if there needs to be an explanation. If it's incorrect, dispute it. And then from there forward, my commercial for our agency, as a HUD-approved housing counseling agency, we provide a financial and home buyer education class that meets the down payment assistance education requirements. Our class is a little different. It's not an 8-hour, it's a 15-hour. We expand on the 8-hour requirement. We have been offering our class since 1992. This is our 31st year of offering our free Fundamentals of Good Credit class to the greater Houston area. Right now, all of our classes are Zoom. We meet on Thursday evenings from 6:30 to 9. This week is our week 2 of 6. So if somebody wants to join us this week, they can go to our website, creditcoalition.org. They can send me an email, Sherry@creditcoalition.org. That's SHERRIE @creditcoalition.org. Tell me you're interested in joining on Thursday. If you want to share this with others, please do. It's really cool. Last week we had 119 people on our call, and quite a few of those were graduating out because they had missed week 1 starting. So in order to graduate out, they have to complete all 6 classes, even if they're out of order. So I don't know how many are going to join us this week. I probably just jinxed myself by saying we had a lot of people last week, but we're using Zoom. Come and join us. If this is not a good time for you, or if you're not interested in the Fundamentals of Good Credit class, but you have questions, please email me. I'll try to answer your questions for you. Again, we're here to help you help yourself, not to tell you what to do. So with that said, Latasha, do you want to start reading to me some questions? How do we do this? Help me here.
Alrighty, so our first question here says, can we dispute an inquiry if we don't remember to apply for something that's on your credit report, or if you apply for something that's on your credit report?
Okay, so inquiries. You have to, my husband just had to do this. He was a victim of identity theft, and there's an inquiry on his report. You cannot dispute an inquiry online. You have to call them on the phone you have to call them on the phone to file that dispute. Yes, you can file a dispute on an inquiry. If they come back, so if the creditor can prove that they had your social security number, your date of birth, and your address, and let's say there was an online application and all that was filled in, then they have no indication that wasn't you. And so they could come back, the credit bureau could say it was verified. What? It wasn't me. All right, so now my dispute is with the company. So I would file my dispute with Bank X. Bank X, I follow through, I file the dispute with Bank X. And I say, I did not authorize this inquiry. And then they will do their investigation. And I'll share with them that I must have been a victim of identity theft or potential fraud, because that is not me. They may ask me to file a fraud alert with the credit bureau, because that's showing that I am saying this isn't me. Then they do their investigation. When they find out that isn't me, because it's not me on the ID, it is not me. Then they will contact the bureaus and remove the dispute. The only entity that can remove the dispute, or that can remove the item on the credit report, is the company that placed it there. But yes, you can dispute it. That was a long answer, right? Okay, next. Anything else?
Oh, go ahead, Deja.
That appears to be the only question in the chat.
Okay.
So
I had a quick question,
yes,
Sherry. How does student loans, because I'm saying this for me because I have student loans as well. How does that being in deferment affect your credit?
Okay, so when a student loan's in deferment, it's being shown that it's paid on time. And so that's a good thing. So that shouldn't be hurting you as far as your scoring model, because it is saying on time. But it depends on the balance too. And, again, the credit scoring model, it's a mystery on how they look at those installment loans. But the good news is, if it's in deferment, it's reported current. Now, one thing good about now, our student loans, our federally insured student loans, the payments won't begin again. It was extended again to May 1st. If you are in a situation with a federally insured student loan and it is in a default situation, this is the time you should be reaching out on studentaid.gov. Again, federally insured student loans. You want to go to studentaid.gov and determine who your servicer is, current servicer for that student loan. And if you're trying to rehabilitate, put yourself in a current status. All of these months that that we are having these no payments because of COVID, they'll be counted as a payment towards that 9-month bring your payment current requirement. So I'm not telling you what to do. I'm just saying that if you have a defaulted student loan, and maybe now that your income is low, so therefore you would qualify for an income-based repayment plan, a low payment, or maybe a zero income-based repayment plan because right now your income is lower. Those will count towards, again, right now it counts towards those 9 months of getting your loan into rehabilitated back to an on-time status. Okay. I would just say this. Student loans are a different beast with lenders too. They're going to use usually a percentage of your loan balance. If you aren't making a monthly payment and the payment doesn't show what a minimum payment would be on the credit report, they're going to use a percentage of your loan balance. It could be 1%, 1.5%, 2% as a payment, even though you're not actually making those payments. Okay?
So do you recommend, because I know that talking to different individuals, especially those are getting prepared to be homeowners, and the advertisement is out there for fix your credit. I can fix your credit in 3 months. And we can get all things off your credit report, including student loans. Do you recommend that, or do you recommend that you take the initiative to reach out to those creditors?
Okay, so first of all, there's nothing those companies for money can do for you that you can't do for yourself for free. The Credit Repair Organization Act states, there's a law that says they cannot accept any money from you until they have performed what they say they're going to do in the contract. So again, that doesn't mean that they don't charge. People do charge, and they are in violation of the federal law. But again, there's nothing they can do. They can't take off correct information. And if it's incorrect, you can do that yourself by just disputing it with the bureaus. Again, there's nothing those credit repair companies can do for money that you can't do yourself for free. Yes, it takes time. But even if you, let's say we have folks that tell us that they paid somebody to clean their credit, and now they pull their credit report a year later, and those items are back on. That's because those items are truly theirs. So again, paying someone, you might be better, not saying you, Latasha, but anyone, the money that you would have paid them, put it aside, and then talk to that creditor and negotiate a possible payment situation, a payment plan with them. They may be willing to accept less than the amount owed and call it, paid in full. Before you send anybody, though, any creditor any money, get it in writing. Get the agreement in writing, what they're going to do when you finish the payments of whatever your agreement is. You want to make sure that they fulfill what they say they do in their letter. Now, some people tell me that they agreed to do a delete. If I pay this in full, the company that's collecting this debt will delete it. Look, the only debt the only item they can delete is the one that they have. They can't delete if they're if they're a company, a collection company, and they bought the debt from, let's say, Macy's, and Macy's does not own that debt anymore. They cannot remove the original Macy's debt. What they can do is they can remove theirs if they placed it on the credit report. So again, I would say get everything in writing. You want to make sure that whatever that you agree to, they're going to hold you to your word. So you want to make sure that whatever you're agreeing to, you get that in writing before you send them any money. Okay, before you agree to send the money, say, okay, look, I want to see this in writing before I agree to pay you this amount. Okay? Do that. I just saw something pop up, but I need to look at my.
There's another question here. It says, does selling a debt have a negative impact on credit scores?
Okay, so it depends. And I hate to say it depends because, again, it depends how old it was. Just know this, that when you settle a debt, you're paying less than the amount owed. You may, if it's been, and I think the federal law is going to change with this amount, or the collection law will change, but it has been, if they forgive $600 or more, you may receive a 1099 cancellation of debt, and then you'll have to claim that canceled amount when you file taxes as 1099 income. So the key here is if you do pay it, and it should say at the end, may say settled for less than the amount owed, but it may not say how much you settled for. The fact is, it'll show balance zero. And so again, you want the information to be correct on the credit report. So my answer is it depends. It depends how old that debt was, because the longer it's been since that item went to collection status. So remember, negative items remain on the report for 7 years from the last time you were late. And if they're trying to collect on a debt that's more than 7 years old, there's no record of it on the credit report. So it's not affecting you at all, whether you pay it or not. And we encourage everybody to take care of their past, because you never know when that credit item may come back and bite you. And, oh my gosh, I didn't, it wasn't on my credit report, so I didn't think I owed it. Yeah, you still owe it. Now, if you agree to a settlement, you don't owe what they forgave. Again, you're going to get that cancel. You most likely will receive a cancellation of debt, that 1099-C. So if you go on the website and says that they no longer service it, and it was taken off your credit, well, that's wonderful. So if your credit score, I don't know how they're going to report who the new servicer is going to be, but it should tell you. You should get a letter in the mail on who the new servicer is. And so again, if it's a federally insured student loan, that information should be on studentaid.gov. If not, I would again find out through studentaid.gov. There should be a way you can ask them a question on what happened to this. If it's not on the credit report, it doesn't mean you don't owe it. Again, student loans, they don't go away. The old 7 years from the last time you were late. No, federally insured student loans, they stay with us until it's paid. So if they pulled it off the credit report, that's kind of interesting to see why, because our credit report's history. And if you had history with lender X, it usually doesn't go away if it's still an outstanding debt, even if you were in a deferment. So again, credit reports show history. It'll show when the debt started, who had it. If that debt is sold or transferred to another creditor, then that new date starts and it'll reference who the original creditor was. Now it's sold and it was purchased. And now, let's say 3 years later, it's sold again. It's going to show who they bought it from and who the original creditor was. So there should be a trail of the information on the credit report when a debt is sold. Now, if it's not a federally insured student loan, if it's a private loan, that may be a situation where it could fall off due to age. But most student loans are going to stick out there with us because they are beasts and they want to be paid. Okay, so check that again. Check the history on who owned it in the past, and you can follow it. Also, I know we're almost done here, but if you do have a collection agency or a debt that's sold, they will post it on the credit report. Yes, they will post on the credit report showing when they bought it, and if you haven't paid it, they're going to show that you're in delinquent status with them. But again, remember, the 7-year rule begins from the date you were first late originally. And when 7 years from the first time you were late that led to the charge-off or collection status, even though now multiple creditors, multiple collection companies have tried to collect on that debt from you, they all fall off. Their debt is only reported 7 years, negative information is only reported 7 years from the last time you were late that caused it to go to collections. So if you do see a creditor that's calling themselves a name and it's showing like it's a new debt, dispute it with Bureau. Dispute it that is not the original date of the debt. And the credit bureau will do their investigation. And if it's been more than 7 years since you were delinquent, that delinquent date that caused it to go to collections or charge-off status, then all of those, if it's more than 7 years, all those items will fall off. It doesn't mean you don't owe the debt. They can still try to collect from you. They just can't report it to the credit bureau. All right. So the questions are about the slides. Are you sending the presentation out, or how are you doing this, Latasha?
Yes, we will be sending it out. Once the recording is set, you will get an email with the presentation and the recording. Well, the link to the recording.
Okay, well, I truly appreciate everybody for spending your evening with me tonight. If I see you in your Zoom box in class, I'd love to see you there. We will our agency will continue with Zoom at least through June. And then my board of directors is deciding in April if we're going to go back to live setting from July through November. Our website will indicate that. In the end of April, we'll post the rest of the year schedule. So right now, everybody, y'all enjoy the weather, enjoy springtime now that it's here. I think it's going to get cold again. But everybody, thank you for your time. I want to thank the team here at the city, Latasha and all your team. Thank y'all so much for allowing me to present tonight. And good luck, everybody. on your path to wherever your dreams take you. Congratulations, and I'm thankful that I'm have a little bitty part of your path tonight. Thank you so much.
Thank you so much, Sherry. That was an awesome presentation. I do have a question, one more question for you real quick.
Okay.
And I think it's very important. A lot of people deal with child support. If they are delinquent, does that go on their credit report?
Yeah, that's going to be in that public records section. So if you owe the Attorney General's office, it's going to be on the credit report. Yep. That's one of those public records, along with your, well, we're told it will, because they have your data. They have that person's data. And the only way to eliminate child support is to, I hate to say it, but pay it. And if you are in a delinquent status with the Attorney General's office, you can turn that into a payment. You can turn that into on-time payments. But if they have a judgment against you, you know, that's going to be, that's one of those public records. Yeah. So they find those. Yeah.
Well, thank you so much for that information. I know that's a question that a lot of individuals ask. So even if they weren't able to stay on, I'm glad that you answered that. They can definitely see the recording and understand that answer. So thank you once again, Sherry. We're going to move on to upcoming events. I'm going through, I may be going a little fast.
That's not me.
That's me.
Okay.
That is me. So I'm going through this, had questions and answers. And now we have our upcoming events. Thank you.
You're welcome. Thank you for having me. I'm going to mute myself now.
Our next Lunch and Learn will be held on Friday, March 18th of 2022 from 11 a.m. until 12:30 p.m. This will be a virtual event as well. This topic will be Houston housing market forecast for 2022 and introduction of our new large track program. Also, we will have another series, and you are able to register today. Session 2 will be the one way to building the perfect team. That will be on March 22nd, same time, same place. Session 3 will be our road rules, what to expect on April the 26th. And then session 4 will be housing tune-ups, maintenance and care after home ownership. Also, we will have a special edition, session 5, our housing financial assistance fair. That's going to be on June 24th from 6 p.m. until 7:30 p.m. Community meetings. We will have a virtual community meeting on March 31st at 3 p.m., followed by another one on Wednesday, April 6th at 6 p.m. Ways to participate will again be on Teams. The link is listed there. It will also be on Facebook Live. And if you can't join on Facebook, you are able to call in as well. And there will be an English and Spanish portion.
All right. All right. So that is the end of our first session for our 360 Road to Home Ownership series. I hope you got all the information that Ms. Young presented today. If you have any questions, you're more than welcome to send me an email. If you do not have my email was is included into the registration form, confirmation form that you received, or you can send me an email and I'll put my email address in the chat. Thank you once again to all the HCDD staff, the outreach team, the PIO team for assisting us with this event. I look forward to seeing all of you at our next event, which is going to be March the 22nd, session 2, building the perfect team. So I want you to be there. I want you to enjoy your night with your family. And if you have any questions, feel free to give us a call or email, but register for Section 2. Thank you so much, and you all have a blessed night.